Welcome to the Week in Review, the show that brings you up to date on the week that was. Here are the top stories. Economic growth slows down in the third quarter. SpiceJet's promoters increase stake in the airline. And traffic violations could cost you a lot more. We start with the state of India's economy. New figures show growth has slowed down drastically in the third fiscal quarter. GDP expansion decelerated to just 6.1% in the 3 months to December. The latest numbers are worse than most expectations. The government had already revised India's growth target for 2011-12 to just 6.9%. But the poor showing in the third quarter makes it unlikely that India will even hit that modest target. Broken sector-wise, it's clear some sectors have done especially badly. Manufacturing grew a mere 0.4% in the third quarter compared to the year-ago period, and mining actually fell 3.1%. Farm showed a modest gain of 2.7%, but the pleasant surprise came from construction, which went up 7.2%. Switching to corporate, GVK Power could sell off some of its stake in its deep-water hydrocarbon blocks. There are 7 oil and gas fields in question, all of them in the Arabian Sea. Mint has learned the company is talking to the UK-based BG Group about a potential sale. GVK could also sell some of its stake to BHP Billiton, its partner in the hydrocarbons field. GVK currently owns 74% of these blocks, with BHP Billiton holding the remaining 26%. The potential stake sale may be a part of larger effort to raise funds for their other ventures. And moving on, India's aviation industry may be in crisis, but at least one promoter has cast a vote of confidence in the sector. On Friday, SpiceJet announced its promoter Kalanidhi Maran had agreed to infuse 100 crores into the airline. The deal will give him 42.9 million shares, which is a 5% of the total equity. Maran will now own 48.6% of SpiceJet. SpiceJet had 16.3% of India's total market share as of January. In other news, earnings from 2 foreign banks have thrown up very different results for the Indian operation. Standard Chartered's Indian profits dropped for 2011, while those for HSBC rose. Stan Chartered's profits before tax from India tumbled 33% to $804 million. Meanwhile, HSBC's rose 22% to $814 million. HSBC said India's relatively high growth helped drive its profits, but Standard Chartered said it was hurt by weak equities and a volatile rupee. And here are some stories in brief. The Union Cabinet has allowed public sector firms to carry out a buyback of shares. The plan will involve PSUs picking up some of their own shares from the government, but it's not known if PSUs will be able to do cross-holdings via the stock exchange. The government hopes the move will help cut India's ballooning fiscal deficit. And bad drivers beware, as on Thursday the government cleared major hikes in penalties for all manner of offences. The fine for drunken driving will be between 4 and 5,000 rupees, and the penalties for speeding and ignoring traffic lights have been increased around 4 times. The proposed changes will have to be added to the Motor Vehicles Act and approved by Parliament. And finally, a nationwide strike on Tuesday brought businesses to a halt in many areas. Some banks and transportation services were affected, but many others continued to function normally. The protesters were from 11 trade unions affiliated to both ruling and opposition parties. They were protesting against rising prices, disinvestment, and violations of labour laws. And that's all we have for you. Thanks for watching.